Okay, so let's take a look at the dollar index. If you look at the weekly chart, dollar index is pretty much in a downtrend. Okay, moving averages are all started pointing downwards. Okay, you can see that the support level, the key support is around the 9300. Okay, there's also kind of a shorter term kind of support around the 9500 or so. Okay, but weekly is on a downtrend. If you go to the daily chart, let me just zoom out a bit. Okay, now I just want you to pay attention to the 950 level, which we came close to hitting it around 30th June. Okay. But if you look at the support and resistance level, you can tell that this level is quite key here. Support here, you got support here, you got resistance here, you got support here, you got resistance here, support here, and a potential support here. Okay, so 9500, quite a key level. Now the other thing that I want you to look up for is the daily chart is in a downtrend, that's for sure. Series of lower low and lower highs, lower low, lower highs, lower low, lower highs, lower low, same high, lower low, lower high. Yep. A key thing to note though, if you look at the MACD, that's a series of high lows, but on the price, it's a series of lower low. Okay, and this is a case of a bullish divergence, Yep, and it's on daily chart. So daily chart takes some time to react. So do not be surprised if the market comes down and tests 9500 again before it starts moving up from here. Okay, so that's why you can see dollar weakness happening for the whole month of May and June, because the dollar index. Okay, so just take note of this. So the dollar index is a really useful reference chart, and that's why May and June you can see that most of the dollar pairs have been moving up because the dollar basket or dollar index has been in a downtrend. Okay, and I think I covered dollar index in the past couple of webinars, and I did mention about this resistance, and I did mention about the downtrend as well. Okay, so it's pretty useful to look at the dollar index as your reference chart before you trade any US pairs like dollar yen or pound dollar or euro dollar or Aussie dollar even. Okay, but right now 9500 seems to be key support. So let's see what happens here. And there's a bullish divergence. Okay, so there's the dollar index for you. I'm bringing your attention to 4-hour chart. Okay, so you see the 4-hour chart, it's consolidating a bit more. Okay, what I think the dollar index might do is that right now there's a bit of a consolidation pattern, a bit of a triangle consolidation pattern. It might break out, but if this, as long as we stay above this level here, there's a chance that it might push up again. I think Thursday morning there's a key event. There's a Janet Yellen testimonial or something like that, isn't it? So just pay attention to that, okay, to see whether the Fed is still in line of their rate hikes, and that is very, very important for the dollar direction. Yep, just take note. Okay, so there's a dollar index for you. Let's move on to other pairs. Now, if you guys got any FX pairs to talk about, please feel free to shout out. If not, I'm going to show you some of the pairs that I think have potential trade setups basically. First one I'll look at is Aussie Kiwi. Yeah. So Aussie Kiwi, if you look at this, now what do you guys think? Is this downtrend, sideways, uptrend? Aussie Kiwi. So do you guys think it's sideways, uptrend, or downtrend? Okay, you look at the daily chart, right? It's a very, very clear consolidation right now. And what I like about the consolidation is that the resistance is pretty strong and well defined. So if you look at anywhere around the 1.0550 area, you can see that there are multiple touches in terms of the resistance. Okay, so you can see here. You can see here. This one's as well. This one. Okay, here. Yep. Irving mentioned that there is a bullish divergence with a double bottom. You are absolutely correct. Okay, Sunil as well. See a bullish divergence. This is not the strongest bullish divergence because a strong bullish divergence would be the price showing a lower low, but the MACD showing series high low. But for this case, it's more of a double or triple bottom, and the MACD showing high low. So it's still a bullish divergence, but not the strongest one. Okay, Irving, you are absolutely correct. Okay, you mentioned that there's a double bottom. Okay, it's very bottomish here because there's a lot of support here, not surprising. And also there's a bullish divergence. Yep, except that this analysis here, right, is more relevant if we are somewhere near the support, or if it breaks the resistance at 10550. I repeat, the analysis of a bullish divergence with a bottoming scenario on the price is more relevant if we are closer to support. Then you would have planned something on the long side. Okay, did you take any trades here, Irving, on the long side? Because right now where we are is a bit too late for that buy trade based on the analysis. Okay, I'm more inclined to look at the 10550. And if I see a resistance, especially a resistance that is as strong as this level, right, my first inclination is to sell first, is to sell. A resistance is still a resistance unless it's broken. Same thing, a support is still a support unless it's broken. Right, so it's just how price action is. Okay, you follow the price exactly like a dog. So for this case, I still think 10550 is still a key resistance to me. Okay, Sunil says he sees an inverse head and shoulders. You mean, just delete some of the drawings here, yeah? So Sunil says head and shoulders. So you mean this is a head, shoulder, and this 105 area is the neckline, isn't it? Yep, similar analysis. So head and shoulder pattern is a reversal. This is an inverse head and shoulder, so it's a reversal of this downtrend. That means we break the 10550, then high chance that we are heading upwards. Yep, similar analysis. Okay, but the key thing that I want you to pay attention on is this 10550 level. So I agree with all your analysis. It's just that I'm trying to plan a trade based on the current price, where we are right now. Yeah. So if you go closer to the 4-hour chart, right? Now you can see if this resistance level gets even clearer. Look at this. 1, 2, potential 3. Yep. Yeah, good call, Irving. Irving has mentioned that he has not traded the buy trade. He's waiting for the break. Yep. I think it's a decent setup if you're waiting for a break of the resistance level to go long again. Okay, because right now, right, the key thing is here now. The analysis, if you're bullish, is you're right. But if I'm bearish, I can also be right. It depends on how you want to plan your trade, which are the levels you're entering from. Okay, so Irving's trade plan of being bullish because of the bullish divergence and down bottom is absolutely correct. It's just that in terms of entry, yes, it's better to wait for the break based on where we are right now. Because for me, if I'm looking for a short-term kind of intraday or scalping kind of trade, I'm looking more at the resistance for a counter trend sell. Okay, it's a bit more aggressive kind of setup. But if you look at the resistance, right, the risk to reward is pretty decent. Two things I'm looking at for this counter trend trade. Number one, I already highlighted to you many times from the daily chart and now the 4-hour chart, key resistance at around the 10550 level. Number two, if you look at the moving averages, right, look at this moving average here. Okay, this is my moving 10 and 20 moving average. If you look at the gap between the price and where we are right now, okay, that has a high probability that the price might want to come and touch the moving average again before continuing its way up, or before it's making it make a total reversal. Who knows? Okay, but you see previous times when it touched the resistance, right? It looked so bullish, the thing just drifted back down. This one is even better. It looks so bullish and the whole thing just shot back down. Okay, I'm looking for something like that. Because the risk to reward for a counter trend kind of setup is pretty decent for this, because if you take any short around here, your stop is just a previous high, and essentially you can target back to around here 105 or so. Because even if once the moving average meets the price, right, then it might make another push higher. Okay, but where we are right now, I think the risk to reward is pretty decent for a counter trend kind of setup. Okay, for those of you that follow me on my webinar for the past how many months, or almost a year plus or so, I think in the past you notice that I always stick to the trend. Right now my trading has evolved a bit more in the sense that I am looking for quick counter trend setups as well. Okay, I'm being a bit more flexible. So I'm not bending my rules, I'm just looking for high probability setups. Okay, whether it's trend or counter trend. It depends on whether you're comfortable or not. Okay, if you're still comfortable just trading the trend, please stick to it. Okay, but I'm just saying that at key resistance and support levels, especially in the longer term charts, whether daily and 4-hour charts, they tend to be respected. I'm not saying that Aussie Kiwi will just drop from here back to all the way to 103, but I'm just saying that it might make one more retracement before it wants to push higher. Okay, just basis on the 4-hour moving average. Okay, look at the gap here, quite a big gap. Okay, and if you look at the daily chart, right, there's not much. You look at the daily chart, look at the moving averages, there's not much momentum yet for it to make a push above 105.5 before a retracement. I repeat, if you look at the daily moving averages, there's not much momentum yet for it to break above 105.5 and continuing higher. As compared to if you look at this trend here, this is the February period, you can see that the moving averages are all aligned to the upside. So the momentum is there. But right now, the moving average is still pretty much sideways, and we are at a resistance area. Okay, so for me, the probability right now is that the market might make a retracement to a downside first before it decides what it wants to do. Okay, and also the 4-hour moving average. Okay, this is more like a fade strategy, whereby the market has overextended, it might come back to moving average also. Okay, so this is what I use my moving average for. I don't use my moving average to tell me when to enter and exit. I use my moving average to gauge the momentum and also tell me whether the market has overextended itself. Yeah, so just to take note. All right, so this is the Aussie Kiwi setup. So if you are in Irving's camp and you're looking to buy, okay, you might want to let it break the resistance first. Unless you told me that you managed to caught the double bottom setup, which is a good setup. Okay, but if you're looking for a short-term kind of trade plan, then there's a chance that there might be counter trend setup with a high stop, maybe back to the 105 or so. Okay, so you need to know exactly what you are planning. Okay, both traders one can go long, one can go short. Both are still able to make money if they know what they're doing. Okay, so that's Aussie Kiwi. Now, since I'm talking about Aussie Kiwi, right, I'd like to take your attention to CAD Yen as well. CAD Yen, because we're talking a bit about counter trend trading and things like that right now. If you go to CAD Yen, it's pretty similar in the sense that we are near resistance level, isn't it? Okay, let me just adjust my horizontal line a bit. Oops, sorry. I hate it when they do that. Okay, so these two levels here, these are all resistance, potential resistance. Here, here, yeah. Okay. Now, if you see the daily chart, yeah, this is potential resistance, strong resistance, I would say, and there's a chance that it might fall back to meet the moving average again. There is. Probability is decent. Okay, with high stop, it might fall back again. But if you look at the 4-hour chart, okay, if you look at the 4-hour chart, if you look at the moving averages, right, you can see that it's still pretty much supported. Now, if you were to trade two counter trend setups, one the Aussie Kiwi, which I explained just now, and the second the CAD Yen. Now, which one do you think has a higher probability? Which one do you think is a high probability setup? The CAD Yen counter trend short or the Aussie Kiwi counter trend short? What do you guys think? Based on my explanation. You guys get what I mean, right? So based on the counter trend setup to the short side, which one do you think has a higher probability? The CAD Yen one or the Aussie Kiwi yen? Okay, Miss Kwan. Miss Kwan says CAD Yen. Any others? Mm-hmm. Sunil says that Aussie Kiwi short is not a counter trend. Okay. Now for me, the easier short, right? Okay, would be the Aussie Kiwi to the short side. Okay, the reason why I say that is, again, nothing's guaranteed in trading, right? But we are thinking in terms of probability. Okay, and if you look at the Aussie Kiwi, right? Sunil, you say it's not a counter trend. Okay, depends on how you see it. If you look at a daily chart, then you would say that it's actually not a counter trend short. It's actually with the trend, and you're just shorting a consolidation. But I call it counter trend short because of how the shorter term or medium term time frame looks like based on this swing. Okay, so it depends on what you're looking at. You're correct as well, Sunil. But the question I'm saying, I'm comparing the CAD Yen is that which one do you think is a better short, the CAD Yen short or the Aussie Kiwi short? Now my preference is more towards the Aussie Kiwi. Why? Because of the 4-hour chart. If you look at the moving averages on the 4-hour chart, this is Aussie Kiwi, you notice that the momentum is still not there. So price has pushed up quite a bit, 1, 2, 3, 4, 5 green candles, but the momentum is still not there because the moving averages are still not aligned to the upside. And the shortest term moving average, which is the 10 moving average I have here, is quite a distance from the price. Okay, so I believe that the probability for the short side is higher in that the price will start retracing downwards. Okay, just imagine, let's see, I can think of a good example. Just like something like a rubber band effect. Okay, so if you look at the swing here on the Aussie Kiwi on the 4-hour chart, it's like a rubber band being stretched. Okay, and sooner or later it might snap back to a neutral level. Okay, as compared to the CAD Yen, okay, as compared to the CAD Yen, you can see that the CAD Yen is very much supported by the moving averages. Very nice momentum. Look at that. In fact, all the way from June period, the momentum has been very well defined because the moving averages are nicely aligned. So the 10, 20, 50, nicely aligned. The gap between the moving averages is quite wide, so the momentum is there. So it's still pretty much supported. Okay, so between the CAD Yen short and Aussie Kiwi short, I think Aussie Kiwi for me is a high probability. You guys get it? Yep. So even though some of you might say that yes, daily chart on the CAD Yen, good resistance level, moving average here, there's a big gap on the daily chart. For me, the high probability is still on the Aussie Kiwi. Okay, there is still a chance that the CAD Yen might consolidate back to the support here at around 88.30. There's still a chance, but the momentum is still towards the upside. Okay, so if you look at the CAD Yen 1-hour chart, there's a false breakout that just happened. Okay, seems like a false breakout. Let me see the 4-hour chart. Yes, it seems like a false breakout. There's still a chance that it might consolidate back to the 88.30 or so. It's about 18 pips away from now. Okay, but I'm just showing you the difference between the two setups in terms of what's high probability based on the analysis of moving averages, resistance areas and things like that. Okay? Right, so that's that. Let's see what the setups that I have to show you. Any FX pairs that you want me to touch on? Because the other one that I have for you is Aussie dollar. Okay, now Aussie dollar, I've been harping on it since many webinars ago. Key resistance circles I think I drew way back in May. Key resistance levels whenever it hits near the 77 to 77, 40, 50 area. Right, every time it hits, it comes back down. Hits, comes back down. It's been happening since 2016. Okay. So what happens that I was actually waiting for it to hit the 77.20 at least before trying to take a counter trend short to a high stop loss. But I didn't get there. The market made a high of 7712 and then it came back down again. Okay. Daily chart is still on the upside. Okay, it's still on the upside. In fact, if you look at the MACD, lower low, higher low, there's still a bit of a bullish divergence. So there might be some licks to the upside. Key level on the Aussie dollar you want to look out for is this line I drew here. See this line? This is a 4-hour chart, yeah? Aussie dollar 4-hour chart. Anywhere near the 7630 area, 7630 area. Okay, because this is a line in the sand. If the 7630 level is respected, high chance we might move back down to support level at around the 75.40. If it's broken, then we might push to a new high. So for me, the line in the sand for me, it's around the 76.30. Okay, because the daily chart to me, on the right hand side is still bullish, but the 4-hour chart is a bit more consolidating. It's a bit of a huge head and shoulders kind of thing. Okay, so I'm keen to see what happens around the 76.30. Okay, but I'm also have my eyes fixed on the 7720, 7730 area because this is very key resistance for me. Okay, that's Aussie dollar for you. Okay, dollar CAD and dollar yen. I'll just cover two more. Let's go to dollar yen first. Okay, let's look at dollar yen. Where we are right now. Okay, dollar yen, we are at the interesting resistance level here. You can see here, it's a bit of a false breakout to the upside. Here, right now where we are. The level is around the 11450. Okay, 11450. Okay, so if you look at the daily chart, in longer term point of view, it's actually very much consolidating. Okay, there's a nice big W alphabet here. But you look at it went to a very nice uptrend from June on the daily chart, and now the key resistance is 11450. Okay, so let's go to 4-hour chart. Okay, on the 4-hour chart, it's still bullish. It's still looking very bullish. If you see the moving average, how steep it is pointing upwards, and the gap between the moving averages shows momentum and shows speed. The only thing is that 11450 anywhere here, this circle I drew based on daily chart, this is a key resistance. If you look at the 4-hour chart closely, you can see a bit of a bearish divergence as well. Okay, you can see lower high, higher high. Okay, so what I think that there's a probability of happening is that it might start consolidating. Okay, it won't crash down massively, but it might start consolidating maybe back to 114. Okay, momentum is still pretty bullish, but we might start to consolidate. Okay, so I wouldn't look to enter any more longs from now. Let's go to the short-term chart. Okay, if you look at the 1 hour, also have a bearish divergence. See this high here? So it made a higher high, but MACD has a clear lower high, so it's a bearish divergence as well. Okay, so I'll be a bit more cautious if I were to enter any more buys, even if it's off this support, I'll be a bit more cautious. Okay, but I'm not surprised if we're consolidating back to 114 in the next couple of days. Okay, that's dollar yen for you. But if you're looking to set up a buy entry I would suggest waiting till around the 114. Okay, at least wait for this daily moving average to catch up. Then maybe your target can be the previous high again. But based on where we are, the resistance, and also the bearish divergence, I predict a bit more consolidation for next few days. Okay, this dollar yen. Did I answer your question, KS? Okay, Sunil wants to look at dollar CAD. Let's go for dollar CAD right now. Oh yeah, nice. Look at that. I was looking at pound CAD on yesterday. Pretty nice the downside, but it's not as nice right now. So dollar CAD. Okay, very, very nice downtrend. Let's see whether there's any support. Yeah, there's a potential support coming up. No divergence, I see. Okay, so there is a, not the best support, but there is support around the 128.50 or so. But yes, very nice downtrend to the, okay, very nice downtrend. See low, lower low, lower high, lower low, low high, lower low, potential low high. And let's see whether we can break another lower low. So this is daily chart. Looking at the 4-hour chart, what we have is a series of lower highs, which is good. Now the trade plan right now is, I think there's cat news tonight, isn't it? Let me just check, yeah. If my memory serves me right. Sorry, let me just have a quick glance at the calendar. Oh, that's tomorrow, sorry. Okay, so Sunil, just take note of your trading dollar cat, big BOC, Bank of Canada news. I think I'm talking about their rates tomorrow night, okay? But if you look at the 4-hour chart, series of lower highs, one setup you can look out for that, let it break this support level first. The previous low was 128.70 or so. Let it break below first, and then you can start entertaining short. The next level is somewhere here. Maybe it looks better on the 1-hour chart. Give me one moment. Let me go to 1-hour chart. Yep. Okay, so this key level here, which was support, resistance, I think it's a decent setup in terms of risk to reward. 129.20 or so. If it breaks this previous high, right? If it breaks this previous high, then most probably it might move higher. But if it doesn't break the previous high, high chance that it might consolidate back down to this support level at around 128.70 or so. Okay, I'm not sure whether we can break and make new lows, but based on the overall trend from the daily and 4 hours, still slightly bearish. Okay, so right now where we are in terms of a key resistance level, 129.20, with a higher high stop, as long as we don't break the previous high, there's a chance that we might start drifting downwards again. Okay, quite similar to this level here. So you see the daily chart is in a downtrend. Now when the daily chart is in a downtrend, doesn't mean that the 4-hour, the 1-hour chart will keep going down. Okay, so because sometimes you might want to consolidate a bit before the overall trend continues. So as long as you have a clear reference chart, I always mention reference chart, as long as you have a clear trade plan, you will know what to do. So the dollar cat, if you have the daily chart very clear in your mind for the past few weeks, you would have been bearish. And if you are bearish all the while for dollar cat for the past few weeks, on a 1-hour chart like that, as long as you establish a key resistance level, right, there are many opportunities that you might have gone short here, you might have gone short here, you might have gone short here. This one was a bit tough one because it was in the middle. Okay, and when it break below again, you might have gone short here as well when you came back to the previous resistance. Of course, on hindsight, it's so much easier to say, but I'm just saying that if you have a longer term direction in mind and you keep following that direction, okay, it makes your life much easier. So you need to understand how to read trends in terms of the higher term charts so that you can plan trades on the shorter term charts. Just like, for example, last week, Aussie Yen was really bullish last week. Okay, the whole week I actually took 3 long positions on Aussie Yen based on my overall direction. Okay, and the trades were based on the 1-hour chart, were based on 15-minute chart, were based on 4-hour charts. That's all based on the direction of the daily chart. Right, you understand what I mean? So same thing for this dollar CAD trade. Okay, because if you look at the daily chart, it has been bullish for quite some time. Okay, so all you have to do is just to look out for levels on the lower term time frame, try to plan your entries. Right, don't chase the trades, wait for good levels. For me, I prefer trading off 4-hour and daily levels. It's just more expected. Yep, so it's a bit, so very important, you need to understand what's your reference chart and plan your trades based on that. Okay? Any other currency pairs that you want me to look at before I wrap up the session for today? Yeah, for those of you in the webinar, I mean, next time, feel free to ask more questions, and because a webinar to me should have more interaction. Okay, at least it's not that, if not, it gets very boring if it's one way. Yeah, feel free to ask me any questions. You can even disagree with me, or give any suggestions or any other pairs. Okay, that's the best way to learn. That's the best way to learn. Yep. Okay, Miss Kwan, there's one more dollar Swiss. Let me cover one more dollar Swiss before I wrap up for the day. Okay, let's see dollar Swiss. I've not touched dollar Swiss for quite some time, to be honest. But let's have a look. So this is dollar Swiss daily chart. Let me see whether I can draw some kind of channel here. Okay, overall trend for the dollar Swiss is bearish. There was a bullish divergence. Okay, let me just zoom in a bit. Okay, this is what I have for dollar Swiss in the daily chart. Okay, it's a bearish channel. Bearish channel. Key level 97 cents. 97 cents. Support, resistance, support, resistance, and potential resistance. In fact, there's two levels of resistance here at around 97. You have the channel resistance and you have the horizontal resistance level. Okay, so that's the daily chart for you. Let's see the 4-hour chart. Yep, 4-hour is quite clear. I like this channel. It's a pretty nice channel actually. So you can see this 97 cents, right? See, very well defined. Support, 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 support. Resistance here, resistance here, resistance here, support here, resistance here, and a potential resistance here. Okay. If you were to take a trade to the short side at 97, your stop loss can be above the previous high, because if it breaks past the previous high here, most probably this channel has been broken to upside and it has been invalidated. Correct. So target can be maybe near the support area in around 96, or even back to channel support at around 95.50. Let me see if there's any. Yeah, it's a nice bearish divergence that adds on to your case as well for the short side. So you see the price here made a higher high, but the MACD made it's not really a lower high, but it's more of a double top. So a slight bearish divergence. Okay, so slight bearish divergence, 97 cents whole number, channel resistance, horizontal resistance, pretty decent level. Pretty decent level. Let's see whether the price can drop from here. Okay, Miss Kwan. All right. So that's the case. Yeah, that's the case. I mean, if you guys are trading based on technical levels and coming to my webinars, even if you are so sure of a trade plan and I agree with the trade plan, and we have the same view, please do not forget to check your economic calendar before you trade every single day, because the news can change the entire complex or the entire scenario of the technical analysis part. Okay, so always check your news calendar. It's not worth to lose money based on not checking it. Okay, it's just not worth it. Okay, because of course if you're lucky, news can go for you sometimes, but it's just not worth it, because news to me is 50-50. For me, I don't really go in depth into somebody's speech. For example, Yellen speaking or Draghi speaking. I don't really try to decipher what they're trying to say and things like that. I try to guess, because everything's on the charts. And if the news makes the charts very messy in terms of there's no direction, long shadows and things like that on the candles, I'm more than happy to skip it and let the chart settle down before I can look at it again. Okay, so always check your economic calendar, even if you're pure chartist or pure technical trader. Okay, if not, okay, sorry, Sunil has a question. How do you monitor which are the currencies that are moving in price on a particular day, because it is difficult to monitor all pairs simultaneously? I totally agree with you, Sunil. Well, I mean, right now, because I'm very familiar with price action, I actually look at 20 different markets every day. So if you look at my pro real-time charts, right, this is what I have. These are all the things that I trade. So in the beginning of a week, I will scan all the markets. Actually, it's pretty, after a while you get used to it, and then whatever I like, I just highlight it. But that doesn't mean that I don't scan it every day. Every day I still look at the markets, and if there's a move caused by some news, if there's a new trend being established or a new key level that has been broken, I will shortlist again. Means I'll highlight it. Okay, and the key thing of shortlisting or highlighting certain pairs is that I have placed price alarms that is linked to my SMS, so that I know when the price is hit. That means a key level is broken or something has happened, for me to take a closer look to see whether I can plan a trade around that. Moving forward, I mean, I've met clients, I've met traders who are really, really good at what they do. They've actually managed to automate their own signals. They don't use EAs, as in they don't use robots to place trades, but they use EAs and robots to help them have more eyes in the markets. Okay, help them so they are able to just have one look. They know which market is trending, which pair is the strongest versus the weakest, and things like that. I'll probably get to that stage in due time. But for me, I'm quite manual in the sense, but I enjoy it because I enjoy looking and analyzing the markets. It's sort of my form of training to be a better trader as well. So that's where I actually scan the markets, and then I just shortlist and put price alarms. Price alarms are very useful so that you won't miss out on anything. Okay. Yep. I hope I answered your question, Sunil. Yeah, hopefully one day when I come up with some form of market scan, I'll keep you guys updated. Okay, if not, thank you so much for your time again. Sorry about the technical delay in the beginning of the webinar. This webinar is recorded. It will be uploaded to the website in 1 or 2 days. Thank you so much for coming by. Happy trading. Have a good night.